Welcome to today's video. I'll be mainly going over what is the order block and what is a breaker block. I got a couple comments regarding what exactly is a breaker block, but before we even dive into breaker block, you first need to understand what is order block. Breaker block is a little bit complicated since it involves both understanding of liquidity shift and also market structure shift. And then also you have to understand what exactly is order block before you even understanding breaker. A lot of trader are not correctly identify breaker block because they're failing to identify a accurate order block to even mark out. Okay, so first let's dive in. What is an order block? An order block essentially is a institution order flow that where smart money enter a large position where you can essentially view it as a liquidity zone that just sit there, either bullish or bearish. So a order block, a bearish order block essentially is a less up close or consecutive candle before a strong move down towards a move, and then the bullish order block essentially is the last down close candle or consecutive down close candle before a strong move up. Okay, often these type of order block you can find within before displacement or a market structure shift, which is what I mainly highlighted before. To really understand a breaker block, you need to understand order block. Order block essentially display where the market shift and displacement that has with a strong move towards either a bullish direction or a bearish direction. In short, order block essentially is a mark of a footprint mark of smart money where big moves begins, where there's a lot of liquidity have sit there. Usually these blocks price tend to retrace back to them and fill those unfilled orders since there's a lot of liquidity from large money institution that wasn't filled before. So a lot of time you can use this as a liquidity zone that the price will respect. Okay, so now let's jump in and take a look at an example here. So here you can see I marked out mainly this is the candle I want to look at. So this candle right here. So these essentially is a last up close candle before we have this manipulation right here. So you can see, let me draw this out. So you can see there is a manipulation at this wick, right? So the wick does damage, and then you have a strong displacement down. Okay, and once there's a candle close, so you see this candle close below of this up close candle low. This essentially is a validated bearish order block. Okay, and then you can see once the next candle open, it tap really into the order block, which is this order block, and then it respect it, and then continue all the way down here and fill this fair value gap, right? And once the fair value gets filled, it push all the way above and breaking this order block, which later on I'll go into breaker block that ties it nicely. But essentially, this in short is a order block. Okay, and I want to also highlight something here. Once this breakout, right, you have the strong up move, and then you also have a manipulation of this candle down here. This essentially become a order block. Now this essentially become a bullish order block. See how this, what I mentioned before, this transition into a bullish order block where you have these consecutive down close candle. So usually I'll mark all these as a down close consecutive candle if they're all aligned. These are essentially one single order block. In this case, this is a bullish order block where you can see the price retrace down to this order block and then respect it and continue upwards later on in a later time frame. So this in short is order block, and hopefully you have an understanding of this. And now let's dive into a breaker block. So what exactly is a breaker block? A breaker block essentially is a failed order block after a liquidity sweep. As we mentioned before, you need to understand two things. One, liquidity sweep need to happen in a market structure break. So in this case, this is the market structure shift break. And then there is a failed order block. So this essentially is a retracement into a liquidity zone where a lot of institution order are not filled, or before or hasn't been filled during the first run. They will retrace back into this area, and which it acts very, very likely to respect the area before continue upwards. Okay, so you can see here I kind of mark out. This is an order block, a bearish order block, right? So this is an up close candle. Once it's filled, came down to grab liquidity. Once the liquidity sweep, the break up with momentum. this is one thing you must highlight here. Whenever a breaker block to be really validated, very, very strong breaker block, there has to be a strong displacement up, right? You shouldn't see the price continue staircasing up slowly and then accumulate, and then you want ideally see a big displacement up. So in this case, you see this big candle displacement with good volume, breakthrough this water block, which means this water block or bearish water block has failed, and this become a breaker block. Okay, so in this case, there is a breaker block here that you can use for your entry. So you can put your entry up here and then your target for up here, right? So this essentially is a breaker block based on a failed water block, that a bearish water block has failed. And also from this case, you can stack confluence. This is also a bullish order block that was filled, that was formed once this candle have closed above it. This is a, let me use a different color, bullish order block that is from here, okay? And then you stack a confluence with the breaker. So obviously, if you use this, your stop pulling up here will be too large. So ideally, this is where the breaker block come in. You can leverage the breaker block with a risk down here, right? So you enter and then you're risking here, and then your target will be at this recent high. This is something you can put essentially leverage as your stop loss. And also something to point out, this also has in line with the fair value gap. So there are multiple stack confluence within this trade. So within this trade, right, it's a very, very high quality setup where you have multiple confluence. You have the breaker, you have the bullish order block, and also you have a bullish, well, the fair value gap in the higher time frame for this. So there's a lot of stack confluence in here that you can leverage as well. So in short, breaker block are smart money trap turned to position entry zone. So I really like to leverage breaker block as a one of the entry that it retest, and once a break and retest, right? So you have a break and then retest into a breaker and then continue into a trend. This is very high quality because breaker block essentially is I view as an if then statement. If this didn't happen, which means if it didn't respect this, then it has to go upward, right? If it respected order block, right, there's no point taking it long here. But since breaker block invalidate this order block, this become breaker block, it has a very, very high chance that it will respect this. It will respect this and continue upwards. Now let's take a look at the example here. So we'll go over on what we have learned during the initial understanding of order block and breaker block, and then apply this to our chart here. So this is NQ, and then we'll kind of go over stepping through what exactly I look for during the April session. So from this section, April all the way till beginning of May, how did I use this to help me chart out my biases and also chart out where is I look for the liquidity will sit. Okay, so during the example in the intro, this is essentially what we cover, the order block here again, and then once this break over with displacement, this become a breaker block, which we'll respect. Now we can take a look, continue over here. Once this form, this is a valid breaker block. We can see the next day here, a couple of days on Tuesday, there is a order block. So I kind of step through one by one to show you what exactly you kind of can see within the chart. So this I'll mark it as a order block. This will be green, and you can see on the next day, Wednesday price, tap into it, respected it, right? Okay, same thing here. Next day, respected it. This become a order block, You see how this is having a continued break of structure. You can leverage this as your liquidity zone, that where your entry should be, and then you can zoom in on a lower time frame. So this is in the 4-hour time frame where you can start marking out daily biases using a order block or breaker block, which I leverage a lot. And then you can continue leveraging here. So here's a big breaker block. So this up close consecutive candle, you can see this is respecting it. And once the next day over here, so I want to highlight here, once this breakout with displacement, you can see once it tap into here, this become a breaker block. So let me do this. This is a order block where it's respected on this day, but on the next day here, this become a breaker. Once there's a failed order block, this become a breaker. Okay, you can also leverage this as well. So you can see here, this one, also a breaker. So an overlap here. See how the price no candle close below this breaker? This is valid, right? These two are stack confluences you can leverage for your breaker block. Okay, and continue onwards. Here you have a consecutive down candle. This become a bullish water block. So this is a bullish water block, and you can see the price tap in here and something here. This is a very great example here I want to highlight. So you can see these candle here, even there are down consecutive candle over here. Ideally, I would not mark this out as a water block. Okay, these one are a little bit tricky. These are range bound. If you want to mark a water block for this zone, I'll ideally put it into a lower time frame. And here I want to highlight it why. In this leg, here, let me move this. This leg, whole leg, I view as one single leg. So you have this, one single leg, one single leg. Okay, a lot of new beginner trader, they will be marking out every single down close candle or consecutive down close candle and view it as water block. That's very, very wrong. Okay, you must identify a clear high and a clear low. Okay, so here you can see a high, a low, right? And then here you have a high, a low. Okay, and then you have a high and then low, and then you have a change of character of new high, a higher high, lower low. This is one single leg, and then this is the new low, right? And once this low is swept all these liquidity, this is a valid water block. This become a valid water block. Okay, and then if you move to the right side over here, you can ask, why didn't price tap back into this zone of this water block? Here's the reason why. There is a breaker block at a higher time frame. So here you can see this is a breaker. Price respected it. Okay, price respected this breaker, and then continue all the way to today's new high, right? So you kind of can leverage this, marking out where your entry want to be, and give you also a determined bias of direction where each day will the direction will go. So for example, on this day, whenever you coming in, you have obviously water block up here. You ideally want to look for shorts whenever it taps into the zone. So if you zoom into a lower time frame, look for shorts here. Same thing when you next day for this water block, when you tap into the zone here, look for shorts here. Okay, so something I'll kind of point out, maybe kind of dive into. Take this for example. So this is the 4 hours, right? And we can go down to the 1 hour, kind of zoom in. So this water block still stand. So let me erase this so it's clear. So this water block still stands, and then we look down to a lower time frame, right? We have also another water block that's respecting here, but even here, this is 30 minutes, and if I go to 5 minutes over here, this is data high at 8 o'clock, data high. Once you have a liquidity sweep over here, and if respecting the water block, we can look for entry somewhere here during the market open. So here, I can mark out 50%, right? So you can enter at a 50% mid-range here. This will be first entry. And let's say if you didn't enter, retrace all the way back, price also tap into here, you can enter here as well. So let's say you make this easy. Short, once it retap into the water block of the higher time frame, and you stop to be here, and then your profit target will be here. This is already 2 hour for this trade. Okay, I mean technically this is the equal low you'll be aiming for, and for this day trade, I think I entered at this pre-market. I didn't enter during the market open. I enter around this 50%, right? So this was my target, 2.5 RR, which is a better risk and reward. But either ways, it's fine. If you missed it, you can scale in here or add in precision here. But this kind of shows you on the top-down analysis that you can just do with order block. But this kind of shows you the power of leveraging order block and breaker block into your tradings. Traces. That you can initiate into your trade and then plan for your trade. We can take, let's say, another look at the most recent one. So this is May 7. Let me see if there's any trade here. So this is the 4 hour. The 1 hour. Then we have the liquidity sweep over here. Right. Once we wait for the liquidity sweep, go down to lower time frame. So in the afternoon, you can see once liquidity sweep, this is the 5 minutes. Order block, same thing. Let's say if we use the strategy of OTE, right? Once there's a market structure break, which is here, the market structure break. OTE this entry, so essentially literally bottom wicket. There's OTE, right? Let me zoom in, and then your long, you can initial entry at 50%. I always put at 50% if I do use OTE. Sorry, the 50% retracement, and then I'll have additional little bit of order at the OTE, and then kind of will end up being, this will be the risk, right? So the risk is middle, so risking 100 point, and you can easily get more than 200 points. So in this case, let's say just aim for this high, right? That's already close to 2R. And that will be all for today's video. If you find this video helpful, please leave a like and subscribe. I'll continue doing more of these educational contents on a weekly basis. And also, if there's any additional content you would like to see, please post it in the comment section. I'll try to do most of the majority highly requested as the next educational video in the future. Other than that, stay safe. Happy trading.